Martin Sorrell.
Little cheese.
All right, sir. Good to see you.
Good to see you.
What did you see then, and do you still see it now?
In relation to the U.S.?
The market, yeah, here.
Well, put the stock market to one side for a minute. Underlying for the U.S., I would remain bullish about, because I think what the president is trying to do in terms of tax and, again, deregulation and infrastructure spending holds true. Now, how long it lasts for is another question. I mean, you would see probably a flip up if the tax bill is passed, if deregulation continues, if infrastructure spending continues or develops momentum, because it does take a lot of time to implement that sort of stuff. You would see, I think, positive momentum in the real economy for another, I would say, couple of years. Then there is a question about whether we get overinflated, because a lot of people point out this has been a boom cycle or an up cycle since Lehman, which was, what, September 2008? 2009 was a big down year. Our revenues were off by 8%.
But that's an almost 9-year uninterrupted bull market, certainly in this country.
Which is, if not unprecedented, very unusual.
So does that part just worry you, that alone?
Well, that worries me. But the world is low growth. I mean, worldwide is about 3 to 4%. It's low inflation. It's very little pricing power for our clients, and therefore a focus on cost. I mean, and then you see Draghi today, the ECB, saying, OK, well, we'll reduce bond buys, but we'll extend them. So there was, something for everybody in that. Those people who were worried
the European Central Bank is looking to curtail all these purchases and make them forcibly, but delay that, right?
Absolutely, it's extended. So there's something for everybody. Those people who are worried about things getting out of control get a bit of ammunition. Those people who are worried about that the economy will be destimulated by interest rates rising and there being a drag on growth, get something out of it too. So something very, I think, very clever, the way that he's dealt with expectations and concerns.
But we still live in a central bank world, don't we? They call the shots.
Well, it is, and that's creating distortions. We see it. Now, I mean, you look at the S&P 500, where's the growth coming from? It's coming from tech companies and a little bit from HMOs. And the multiples, last time 22 times earnings for tech companies growing at about 8%, and 22 times multiple for packaged goods companies growing at 2%. You look at most of the packaged goods companies that have reported, fast-moving consumer goods companies that have reported in the last few days, including today, you see very little volume growth, a little bit of pricing from Latin America or parts of Asia, but basically it's a very tough road. We see that in the context of the spending of our clients. Packaged goods clients are under tremendous pressure. There's also distortions
called. It affects how much money they get, give you to advertise.
Right, it's a variable cost. We think it's an investment, not a cost.
Right. Is that a more difficult pitch these days?
More difficult pitch, but in the long term, it's getting more traction, because one of the central issues for the packaged goods companies is they're not getting the volume growth. And if you you have anybody on your show who has a history in packaged goods, the warning bells start to ring when volumes are flat or not growing significantly, if all you're getting is a little bit of price. And
so
you're seeing
we're already getting that now.
Yeah. So that is a big warning bell. Now, at the same time, you have the disintermediation or the disruption caused by a Google and a Facebook, which now account for 75% of digital advertising. And digital advertising is about 30% of the worldwide market.
Is that where all of that, you think, in the future is going?
Well, a lot of it's gone already. And then you have the question about what Amazon is going to do for brands or against brands by disintermediating or disrupting distribution too. So if you're running a big business at the moment, you have disruption on production from robots and 3D printing. You have disruption from media, Google and Facebook, and you have disruption in distribution from Amazon and Alibaba. It's a rather confusing world, and I think that's made people focus on the short term, and that's been exacerbated by cheap capital, low-cost capital, low interest rates, which has driven activist activity and zero-based budgeting activity.
But does it bother you from just a pure valuation standpoint that it's getting frothy?
I think there are bubbles forming. I mean, I go back to that. How can 8% in tech be 22 times and 2% in packaged goods be 22 times? Something has to give. Either packaged goods are overvalued or tech is undervalued.
But we've seen a remarkable thing in the U.S. market. I haven't followed all the European markets individually to that degree. But we cycle in and out of favorites and sectors with relative ease. I don't know if that's a good or bad thing.
Yes, to some extent. But I think what's driving the economy, and you see this in the Chinese markets as well, and the real market as opposed to the stock market. I mean, Chinese technology is becoming more and more potent. When you look at companies like, Baidu is reporting shortly, but Tencent and Alibaba are probably the two that you focus on. They're both $500 billion companies. I mean, there are five, the big five, Apple, Amazon, Facebook, Google, and Microsoft are all $500 billion plus. Alibaba and Tencent are also $500 billion.
But does it worry you after the Chinese Congress meeting as they're tightening their government grip?
Does it worry me? I think the question is, does it worry them? And I think they're going to go from strength to strength. That I'm not suggesting you watch all 3.5 hours of President Xi's speech, but that comment about China standing tall in the East, which reverts back to what Chairman Mao said many, many years ago about
well, he's now on his level. He's now on Mao's level.
He's now in the Constitution, but Mao said that Chinese people would stand up. Now he's saying they're standing tall in the East. That is a strong signal about where he sees the strength of China. And because Belt and Road and the Asian Development Bank initiatives are all initiatives that the Chinese are taking to fill that vacuum that's tending to be generated by a foreign policy under the Obama administration and to some extent.
But I read, maybe too paranoid here, but clear military, implications from that. I mean, look, he's now at Mao's level and going to the Mao extreme.
Well, China is on the march, and the big issue is a $10 trillion economy growing at 6.5%.
Yeah.
When does that catch up with a $19 trillion economy growing at 2%? The President wants it to grow at 3 or 4, which would obviously make it longer. But inevitably, Chinese, a lot of the Chinese see the last 200 years as a blip in history. Go back to the 19th century, and the Chinese economy was one of the most powerful, if not the most powerful in the world. So this has been a 200-year holiday for them.